How's it going, guys? I'm going to make a video about my model that I do enjoy, which is the double sequential SMT in a high time frame gap. All right. So essentially, what you are looking for, right, is a sweep. Right. It can be a sweep of anything, as long as it's a quarter. Right. Now, I think yeah, right. So I don't have the India on, and so you're essentially just waiting. You're always waiting. Right, don't want that. Don't want PSPs. Pre-record high low. Sure. Cool. What I really want is just sequential SMT. Okay. So when I go down to the 4 hour from the daily, you'll see that we now have sequential SMT right here on this candle. Now this is a CPI news event candle, right? Yeah, and it gives you this displacement down. Now if I just go to 2 and I'll bring over euro. Bring over euro. Oh, sorry, bring over pound. And you can see the difference, right? It's very obvious. Sorry, I'm just whoops. There it is. Right. So due to the fact that the news event was very compressed with pound and expansive with euro, we already have our first trigger, right? Yeah. As you can see, this is CPI. All right. So that's the news event that is doing this. Now, our mentor says to wait an hour after news to see what happens before getting into the trade. And this is why, right? So you go down to the hourly and you start allowing the day to play out, right? Now, this is the Tuesday, and you probably shouldn't really think about trading straight after. All right, whoops. My bad, guys. Trying to do this in a bit of a wow, really? Where everyone, what the hell is going on there? Okay, that's much better. Jesus. Okay, so you can see now, right, that we have hidden sequential SMT, right? Yeah. And it produces this, right? So, where is it? See right here? No. Just to make sure that you understand what you're looking at, right? This is Dixie. Actually, I'll go to 3. Hell. Right. So you see the difference, yeah? Euro and pound both closed below. Yeah. Both of them closed below this low. Yeah. But Dixie did not close above this high. Okay. Now, all of this is taking place inside of this this monthly fair value gap, right? And not just anywhere inside of this monthly fair value gap. It's happening right there. So you have this massive divergence within the weekly candle itself. Yeah. And then you have this divergence inside of the daily candle itself. Right. and it's exposed by the sequential SMT. Yeah. And it is why that when price gets up above this high, it never comes back, guys. It's all the way up here before it does its next crazy move down that you could get on board with to go up here. Now, I called this inside the mentorship. All right. And those who were in there from February in the early days will know that I called this. And I said we were going to go up and take non-farm payrolls high. All right. Now, I'm showing you this because, like, I'm just showing you why I love this model. Right? Not to say that, like, this is the be-all, end-all of every model and it's always going to work perfectly, because, no, it doesn't. Right? But I was in Day's mentorship. Starting here, guys. And by this point, this is the ability that you can gain. All right? Not gloating or anything like that. This is a legitimate call that I made. All right? You can see it happen because of high time frame gap, guys. It's the high time frame gap. What does the monthly chart tell us is going to happen? All right? See that right there? Basically a devil's mark. We opened the year and just dropped. All right? And we chased that thing for the entire year. All right? And boom, we finally hit it. It was the draw on liquidity. Now, yeah, sure, we went down lower. But this fair value gap had the potential to get us there. And that is what the trade idea is formed. External range liquidity back down into internal range liquidity into external range liquidity. It just didn't make it. But I'm using this and I'm framing this because this candle should want to go up from this fair value gap with the logic that we know about fair value gaps. All right. And so when on the weekly time frame, yeah, you see this candle here do this and sweep this low, right? There is a chance that it fully fills the fair value gap, right? It's called a fuck you. Right? If you ever see FU on my chart, that's what it stands for, fuck you. Because you enter here thinking that you got the sweep, you got the turtle soup, and then the real move happens. That fake out all the ICT pattern traders, right? And we know what to be looking for. We know that on the 4 hour, when that massive candle is printing, right? No, that's wrong. On the 4 hour, when that massive candle is printing and it creates this little dot at the bottom of it, that if we sweep these lows, you're going to see this high get blown out. All right. It's that simple. Double sequential SMT into a high time frame gap and look for the liquidity pools that are provided for us to reach for. And look what happens to those liquidity pools that are sitting there and we miss it. Only to come all the way back up and take it out and then have this reaction. So I traded this non-farm payroll up to here because of the same logic. The double sequential T isn't there, but I'll show you the logic, right? If I turn on the opening gap, all right, Yeah. So that is... So, yeah, here. I normally invert my Dixie, and the reason I invert my Dixie is for this specific reason. It's so much easier to find this shit. So here is Wednesday's low, right? So Wednesday. This is a weekly cycle, sequential SMT. And then we have another weekly cycle, sequential SMT. As well as, I think it's a daily, just off the top of my head. I think, yeah, right here. So this is a daily sequential SMT. And this one was... Right. Do you see, guys, what my model is? Right. Price is telling you that it wants to go up from this gap. And it's telling you this entire time. Inside of this chop. The reason for this chop is to create this sequential SMT. For the liquidity to be grabbed on the other assets. And then for the whole entire thing to go parabolic because the algorithm is done feeding itself. It doesn't need the euro stop losses because it will magneto this stuff. And anyone who put their stop loss here is going to get utterly destroyed. Where are we? All right. You see how the low that got created on that non-farm payroll and all those sequential SMTs get destroyed? Magneto. Do you think there might be some model of up here? Maybe? Anyway. That's looking pretty juicy. It's everywhere, guys. And if you just study high time frame gaps and go down into lower time frames, you will see interesting price action. Whoops. You will see interesting price action like this, and you will be convinced that there is no way that this market is anything but buying and selling. Sorry, anything but an algorithm running the markets. It's not buying and selling. That is too perfect. That is why I trade this stuff. Right. So hopefully that helped you guys understand what to be looking for inside of a gap. See, big blue box. Right. Nice big blue box. And then down here, nice big blue box. And they both have the same things in them. Right. There is a weekly cycle. There is a monthly cycle. Both of them happen inside of the blue box. Blue box, triangles, go the direction the triangles are telling you to go. If, then, if, then, if, then, if, then. And all you have to do is wait. You just have to wait. Okay, guys? Hope that helped.